Okay.
Thursday, natural gas.
So what time is it right now? Let's jump over.
It's 10:21.
Okay, perfect. So 10:21, we're jumping over to the NADEX platform. Here's our natural gas contract. I asked what time it is because we get those numbers at 10:30 exactly. Thursdays for natural gas. Wednesday, yesterday, we got oil. Oil with some big-time volatility this morning.
Yes.
So natural gas, we're looking at the August contract, currently trading 271.65, and we get those numbers in about 8 minutes. So we're going to look at possibly setting up a volatility trade with exposure to the upside and the downside. I jumped to the 11 a.m. expirations first.
Okay.
And what we want to see is what kind of price spreads are we going to have in these spreads, right? So we're looking for upward exposure and downward exposure, buying the bullish one, selling the bearish one. That way you have exposure in both directions. So the 11 a.m.s, and I'm just going to jump around quick, they line up with 270. I'm guessing that it's probably going to be 270 is going to be our point, for noon expirations, and as well as probably even, the dailies.
It's not that, a penny then, right?
No, it's not.
Yeah.
You know, you're going to be paying for intrinsic value to the upside is what's going to happen. So we'll go through each one. 11 a.m., so you have basically 30 minutes after the news. Let's pull up. Here's your bullish trade. Now your bullish spread, that's the one that's going to have intrinsic value because you have value in anything over 270.
Yeah.
You're trading at 271.65, so about 16 ticks of intrinsic value. And that's where a lot of it's just intrinsic value, and you're only paying about $4 in premium there. And then your bearish one basically is going to be completely out of the money spread, where that one's going to cost you about 7. So you're looking at $27, which represents
2.7 pennies.
Exactly, away from that 270. And the key being that you need 2.7 pennies in either direction. You already have 1.7 pennies to the upside.
Right.
So you really only need a penny of movement to the upside from where we're currently sitting to break even, and that's because you only got to make up what you're kind of paying for here and some premium, versus if you want to make money to the downside, you got to go 2.7 pennies below 270, just so you're aware of that market bias, right? So you have a little bit of a head start to the upside.
Those are the 11.
Those are the 11s, and on each of these trades, you're going to have that little bit of a bullish bias where you're going to be paying for that intrinsic value. We'll jump to the noons, so same exact price spreads. Here's your bullish spread. Now, it's interesting here. We'll just put it side by side. Here's your 11 a.m. expiration.
This is pretty cool.
Here's your noon, right?
Yeah.
We're talking about 1/10 of a penny.
I know.
Is the difference. And in fairness, natural gas, not as volatile as crude recently.
Right.
But if you are looking for volatility, so if you're making a volatility trade, you're automatically saying, I think the market isn't pricing in enough for the volatility. I think it's going to be more volatile than maybe the market is pricing. And that's not a bad price if that's actually how you felt, to push it till noon until 11. So with that, you'd be buying again the bullish spread. Now there's about $18, $19 as we speak. Natural gas is rising in intrinsic value. So the bullish going to cost you about 24 to 1 per contract, and bearish going to be a very similar. Now this is what's really interesting, right? So let's take a moment here. The bearish spread, just to look at things, because it's out of the money, it's the exact same price to sell it. Let's just say you were bearish.
Right.
Just this side of the trade.
Right.
What a great idea. You know, this is where you really want to get used to it. Download the demo account if you're going to be trading on this, because that would be a mistake to ever be selling this for just $7 of risk when you can do the same exact trade until noon. And let's just see and jump ahead. So that trade, the noon's going to cost us about $31 to $30 about. Versus 24 for the 11 a.m.s.
Okay.
And then let's jump to these, because here's what's going to be interesting. So the 230s, they're going to give you 50 cents of movement. Okay. I don't know what would have to happen in the market to see 50 cents. Very unrealistic, but still
that's $5,000 a contract, folks.
In the futures. In the futures, not on NADEX. If you're, so here's your bullish spread. Be paying about 26, and that's basically just paying for that extra 2.5 hours till 2:30, because you're still getting in with the floor at 270, so very similar to the noons. The only difference being is you have 2.5 extra hours, but look at where the market. So now you're paying about an extra 0.2 of a penny for that extra time, and then on the bearish side, going from 270 down to 220. And this is where, so it looks weird that it's actually cheaper.
Wow.
But what just happened is natural gas, in our comparisons, went from 271.6 to 272.1.
Okay.
So this is really interesting, where you really want to be all over it. So check out the divergence in this market. You want to sell and be a bear. You can be until 11 a.m. for $7 right now, or you can have all the way until 220. For $6. So to finish our comparison,
that's mispricing.
Yeah, it is a little bit of mispricing. So to finish the comparison, it looks like the 230s Is that right?
33.
33, yeah.
3.3
So it's like
cents.
24, 30, and 33.
Yeah.
Good. We'll be right back with those natural gas EIA numbers.
Stay right there, folks. Come right back. Dow down 111, NASDAQ off 29, S&P's off 11.5. Come right back. Welcome back, folks. We got a little move topside here in the gas
What's your
market.
definition of little move? Because,
Totally.
man, oh, man. So, yeah, we're looking at the chart. Obviously, we're trading at about 271.6, right? Was right where we're at. We're now at 275.12.
Look at that number.
So any of these points will jump to the numbers. So it looks like we got to stockpiles rising 46 billion cubic feet last week. You had natural gas inventories rising to 2.25 trillion cubic feet, the estimate being 56. So slightly under that. That's where you're seeing that price jump in terms of not coming quite in with where we
Look
got.
at that number.
Yeah. So just to recap, remember, I mean, it's always nice where, as we're going over, this trade had a little bit of a bullish bias. You had a head start to the bullish side.
1.5 pennies.
And when you get the jump to there,
Yeah.
you know, any of these trades, I believe the first one was like around $24, so 2.4 pennies. We're up to 30. Even the 230 trades, those are going to cost us about $33, right?
Yep.
Meaning that you need about 3.3 pennies just to break even for that trade. Man, and quite a rocket ship as it goes. Just
It is.
continuing to climb, approaching 276. I mean, you're almost up 6 pennies from where we were right at 935. Quite a little lead up. Maybe who knew what was going to happen, man? See that little rise for the final half hour into those numbers?
Big number, man.
Big number for sure. So we'll check back, but quite an acceleration.
Let's just pull a couple of them up and see what the bullish one's trading at right now.
Sure. Yeah. So to jump, we'll jump to the noons just to give or take. There's your bullish spread where all your value is going to be in, and it's pretty much going to be just oscillating right around bid offer, right around where natural gas is basically trading.
No, I meant money-wise. If you took one side off
Sure.
of
Yeah.
the trade.
Yeah. So you're looking at about 52, right?
That's nice.
Oh, definitely. Yeah, and that was the noon, which I believe is going to cost us around like $27,
Right.
2.7
Right.
pennies. So you're talking about almost doubling your money. And if you have the noon, you could close out the bullish spread.
Yeah.
What would remain active is still your bearish spread.
Right.
Now, this is offering no value as it should because you're almost 6 pennies out of the money.
Totally.
But guess what? Turnarounds do occur as we see it on a regular basis after these numbers. Doesn't mean it's going to happen today, but we would see what happens.
What's intriguing is that they were only 10 BCF short, and the market is saying, well, guess what? That build, you know, before, you know, I'm not sure when it's, whether it's 6 weeks that they start using natural gas again, basically. You know what I mean? When the build season is. But that's pretty impressive, man.
No, quite a market reaction.
Yeah.
And there's your full breakdown in terms of week by week where the build is. They break it down by region, but yeah, surprising market. And as we jump back, still just kind of hanging right above that 275 price point. And we'll check back in one more time throughout the auto.
Welcome back, folks. Dow's up 94, NASDAQ's up 29.
They're all
Down
down.
94, NASDAQ's down 29, S&Ps are off 10. Natural gas.
Yeah, we'll check back in one more time in the hour. Quite an acceleration as we speak, above 277 now. It's about 10:55. We're 25 minutes after those numbers.
Big number, big
Quite
move.
an acceleration, no matter where you leverage your trade there.
That was
quite
nice
an acceleration.
trade.
So yeah.